Hello friends, we have seen till now what is a financial reporting standard or an accounting standard, what is the structure of an accounting standard, which principles accounting standard provides, how to read that. The question arises and question is frequently asked where these reporting standards or these accounting standards are now applied. In our next video today, we are going to watch what is the applicability of this financial reporting standard, where do we apply this, and what do we do with this financial reporting standards. Accounting standards or financial reporting standards are applied in preparing true and fair financial statements. The basic objective of the financial statements is to prepare a true and fair picture, financial position as well as performance of the entity, which can be presented to the users of financial statements. There are various users: investors, government, employees, vendors, etc. All of them require these financial statements. So what all components which are covered as a part of the financial statements, we are going to look at that very quickly. Whatever we have seen under Indian GAAP previously, you might have studied that, more or less it is the same. Few things, 2 to 3 things which are different under IFRS and consequently under Ind AS, we are going to discuss on the same. So the components of financial statement, the first one, under IFRS, we call it as statement of financial position, which is a balance sheet. Simple, straightforward. There is no change from Indian GAAP under IFRS and even under Ind AS. It's the one and the same. Statement of financial position is the balance sheet. That's it. So we will provide a balance sheet for the current year for that entity. Second, statement of profit or loss and other comprehensive income. Now, one point which is new here is the other comprehensive income. Other comprehensive income is the new concept. We are going to look at what is the concept of OCI in a separate 15-minute video subsequent to this. So OCI concept was not there under Indian GAAP. It has been introduced under IFRS and consequently under Ind AS. So this is for the current year. Subsequent to that, there is a statement of changes in equity. Again, this is a new concept for us. So one concept which we had seen is concept of OCI, and this is SOCIE. This both are there under Ind AS as well. SOCIE is statement of changes in equity. The name itself suggests what exactly it is. Statement of what? Changes in equity. Equity is what? Equity is total share capital plus all your reserves and surpluses is your equity. Any changes in that, we will have to present it in a reconciliation form which will make statement of changes in equity. So we will have all the reserves, share capital and all the reserves plotted in one row each, in one column each, and the rows will contain the reconciliation for the previous year, that is opening balance, changes during the previous year, then previous year's closing balance. The same will be opening balance of the current year, changes during the current year, and closing balance of the current year. So this is statement of changes in equity. It's nothing but reconciliation between opening and closing balances for the previous year as well as for the current year. So this is for the current year. Then statement of cash flow. So we had this statement of financial position, we call it as a balance sheet. Then we have statement of profit and loss. Additional concept is OCI. Then statement of changes in equity. We have statement of cash flows as well in Indian GAAP. So it is continued. Number 5th is notes to accounts, including significant accounting policies and explanatory information. So this is again continued, the same thing which we were following under Indian GAAP. So these are the similar components, correct? Again, the 5th component is also the same. comparative information with respect to the preceding period. Comparative information with respect to preceding period in all these statements. So all four statements: statement of financial position, statement of profit and loss account and OCI, statement of changes in equity, cash flow statements and notes. All these five statements will require comparative period. So current year, as I said, the entire information which was mentioned before point number 6 was required for the current year. Point number 6 requires you to present same information for the preceding one. Now there is small difference between IFRS and Ind AS. IFRS says you can present more than one preceding period for any of the statement, but 1 year is mandatory for all the statements. 1 year is mandatory for the IFRS as a preceding period. However, one additional year can also be provided under IFRS for any of the statement. Under Ind AS, it is not allowed. Ind AS requires you to present only one single year. So this is a carve out. You cannot present more than one financial year. So this point is to be required to be remembered. One more point which is new. So there are 3 points, as I said, new. So this one, OCI is new. Statement of changes in equity is kind of new, I would say. And this, number 7, statement of financial position as at the beginning of the earliest comparative period in following 3 cases. This is the new requirement. So in all, there are 3 new requirements under IFRS and Ind AS. Number 1 is OCI. Second is statement of changes in equity, and third is additional balance sheet, which is the opening balance sheet in 3 cases. Which are those 3 cases? Number 1, it's a change in accounting. Whenever there is a change in accounting policy, whenever there is a rectification of an error, and where there is a material reclassification. In all these 3 cases, so we are presenting 2 balance sheets, one current year, another previous period, preceding period, correct? Additional third balance sheet is required whenever there is a change in accounting policy, whenever there is a rectification of an error, and third, whenever there is a material reclassification of any of the item in financial statements. So in these 3 cases, you need to present additional balance sheet. This was not the requirement under Indian GAAP. This requirement is nothing but retrospective restatement. Retrospective restatement. Retrospective restatement was prohibited under Indian laws. Under Companies Act 1956, retrospective restatement was prohibited. It means what? Once the year has been closed, financial statements have been prepared, those have been prepared. You will not be able to open that period. Rather, in financial statements also, you cannot change the amounts. Whatever changes are required, you will do it under the heading prior period error or effect of change in accounting policy. In the current year column, the effect of the previous years will be accounted for in the current year itself. You will not change any amount in the previous period. So let's see with the quick example here. I have drawn the balance sheet. Balance sheet is actually not presented in this way. It is a normal vertical format. First assets, then equity and liabilities. This is just for our understanding. I am plotting this balance sheet side by side, equity, liabilities and assets. Okay. Now, if you see, there are 2 periods. 31st March 2023 is the current period. 31st March 2022 is the preceding period. Actually, these are the only 2 columns required. Even under Indian GAAP, this was required, the 2 columns, 23 and 22. Companies Act 2013 has now changed, modified to some extent where you can actually retrospectively restate few things. And this was for the Ind AS especially. Now, if you see what this last clause requires, if you see there is a change in accounting policy, how do we account for it? We account for it retrospectively. So accounting policies, let's say, change for the financial item in the balance sheet, let's say, which was there since last 4 to 5 years. So if I'm changing any measurement policy with respect to that, then I require to present or change that accounting policy such that the change was applied since its inception. So that line item, if it's there under asset or liabilities, before 2021 or before 2022, then I will remeasure that line item as per the new accounting policy. Any change, what under Indian GAAP we used to do, entire change used to be accounted for in the column 31st March 2023. It never used to, we never used to change 31st March 2022. Had there been any mistake which was of, let's say, 14-15, for example, 2014-15, I used to rectify that and show that as 31st March 2023, showing as a prior period item in the profit and loss account. There is no more prior period like item under IFRS and under Ind AS. What we need to do is any impact of measurement with respect to periods prior to 31st March 2022, which is presented as a preceding period, all effects are cumulatively accounted for, calculated for, and provided in this, let's say, in this line item. So let's say the line item is under non-current section. So we will provide that under opening balance sheet. So cumulative impact. So any impact, this is called as a cumulative impact of the prior periods before the period which is last presented. So 31st March 2022 is the preceding period. Any impact with respect to change in accounting policy, correction of an error, rectification of an error, or reclassification of any financial item. With respect to this, the impact prior to 2022, let's say from 14-15 to 31st March 2021, cumulative impact will be provided under the 1st April 2021. The corresponding impact will appear under equity in retained earnings. This is cumulative impact. This is cumulative impact. And then subsequent to that 31st April 2021, these are the 2 years. This we will provide as a period specific impact. Period specific impacts. So these 2 years will flow through P&L under equity. So these are the period specific impact. These are the period specific impacts. This is what is meant by presenting an additional balance sheet. No other financial statement requires the third year. Only balance sheet requires additional financial year. That too only in these 3 cases. Change in accounting policy, rectification of a prior period error, and 4th is reclassification of the item in the financial statements. So in these 3 cases, you need to present just a balance sheet which is an additional balance sheet. You are not required to present a profit and loss account in addition to current year and preceding period. Not required. It's only about balance sheet. Now the common question is, what if the impact or the rectification of error or change in accounting policy impact does not go beyond 31st March 2022? It does not go beyond, that is back from 31st March 2022. Then you are not required to present the third year. Alright? If it is going beyond 31st March 2022, that is, let's say 14-15 in our example, then you need to present an additional balance sheet. Alright? So these are the components of financial statements. So when we say financial statements, these are the 7 items, these are the 7 components which are comprised of the financial statements. So for example, board of directors report, it's not part of the financial statements. Let's say your MD&A report, that is management disclosure and analysis report, is not part of this. Corporate social responsibility report, not part of the financial statements. So financial statements will comprise only of the 7 line items. If there are any such components like director's report, MD&A report, etc., that will form part of the annual report, not of the financial statements. Okay, so those are outside the financial statements. So calculation of the numbers under those reports, those are not governed by any of the accounting standard or financial reporting standards. So you have to remember that. Most importantly, all financial statements have equal prominence. None of the financial statement which is included here is more important or less important. Not like that. All carry equal prominence. So this is what is all about the financial statements. Stay tuned to the FinPro Consulting's YouTube channel. Subscribe to our channel for more such informative videos and to receive information on the upcoming videos. Thank you so much for watching this video.